Hello everyone and welcome to my morning report analysis videos with me, Richard Perry, market analyst at Hantec Markets on Friday 14th of December. A few various aspects that are really driving markets negatively today. First of all, China data, economic data out of China, very disappointing. We saw the industrial production and retail sales from China coming in very much below expectations. Industrial production 5.4% versus 5.9%, retail sales 8.1% versus 8.8% expected. These are really quite disappointing numbers and simply reflect, I think, the fact that the Chinese market is becoming increasingly sort of affected by the sort of prospect of the trade dispute with the US. Add in the fact that Theresa May has gone to the on Brexit. Theresa May has gone to the European Union Council and come back. Well, she's seemingly ready to come back pretty much empty-handed, and it's not great for sterling. That's hit sterling to the downside. Add in also that what we've seen is Eurozone flash PMIs this morning have come in negatively. So we've seen Eurozone flash PMIs. Let me just scroll down to it. Have come in across the board really quite negative. Look at that flash services PMI, really disappointing. Composite well below expectations, and it is really suggesting that the Eurozone is not in a good place at the moment in terms of growth. So what we've seen today is the Euro suffering, sterling suffering, and risk appetite generally suffering. So that is all pretty much across the board. We've seen equity markets coming under pressure today. Again, the DAX falling way down, and just generally speaking, everything that is risk averse, i.e. the Japanese yen and also treasury yields falling, all these sort of playing into this whole risk averse appetite today. So in terms of data points today, we've got retail sales for the US this afternoon, so let's go to that. So we've got retail sales this afternoon and expected to come out at 0.2% positive on the month. Where are we? There. 0.2% positive on the ex-autos retail sales, and then also we've got industrial production for the US coming in at 0.3% positive for the month as well. But it doesn't look great for risk appetite today. Now my chart today is Aussie dollar. Now what's linked to China? Well, Australia is very much a currency that trades around the China story, and subsequently what we have seen this morning is the Aussie coming under significant pressure, falling away. I mean, I was sort of thinking about this this pivot line at 71.60 being a basis of support. Well, it's under pressure and it's on the brink of closing to the downside, and a breach of that 71.60 would really reopen the lows, to be honest, again. So this is a critical moment, I think, for the Aussie dollar. Momentum indicators look to be unwinding pretty much just on a medium-term basis, but seem to be turning lower again, with the RSI now sort of in the multi-week low, actually calling for the breakdown. MACD lines as well accelerating lower, stochastics turning over. The sorry, that's not correct. The Aussie dollar also has broken that recovery uptrend. Momentum indicators turning sharply negative on the hourly chart, so it really does look as though this support and the pivot is under pressure, and a close below 71.60 reopens the lows at 70.20. You've got a little minor breakout support at 71.20 as well, but to be honest, 70.20 could well come under pressure on a breach of that 71.60 level. So yeah, the Aussie is under pressure today. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.